Hi trader, welcome to Elite Currency. My name is Chris. Time to take a look at the euro dollar and pound dollar. All right, I want to start with the euro dollar daily chart, and basically we saw a reaction to the 50 and 61.8 fib zone that could be support levels, right? We talked about that, and we saw a reaction on Friday with a doji and a big wick at the bottom. So the upside was depending on the fact whether price could break above local resistance, this 21 EMA on the daily chart, but on a 4-hour chart as well, these resistance fractals. All right. Now price did not break through that. 118, 118.10 was a key level, and price in a way started to move quite correctively to the upside here, I think. So from my perspective, I think a larger wave 2 is still likely at this moment. And I think that even if price makes an upside, I wouldn't be surprised if it were to make a dash down to the 61.8 fib or the 78.6 fib. That is in part based on the fact that this wave 2 is a little bit short so far. We had a wave 1 that lasted about 2 weeks, 14 trading days actually, I should say. And so a bit more, 3 weeks of trading at least. And we had a downside that has lasted about 10 days. So I think a wave 2 could last typically a little bit longer than that. It could be equal or maybe even longer than the wave 1. It could also be a little bit shorter than the wave 1. So, but we have, of course, the interest rate on the US on Wednesday evening, European time, that is GMT time. And of course, Thursday, euro and pound interest rate. So it is a little bit tricky. And I think that, of course, the data will impact this currency pair, and price might make an upside before and then a downside during the US interest rate. And with the euro interest rate, it can go up again, just to give you an example of what could happen. So technicals might be important, but the news is going to impact this price movement. So for the moment, I think a larger wave 2 is more likely. Therefore, I think that if it does break above this purple line, that the breakout is probably limited to 119 and this resistance trend line and these fractals. That could be, again, a bouncing spot for more downside. So let me put that with lines. Here we go. This could be the breakout, but the breakout, I think, limited between 118 and 119 because this could be a bouncing zone and price could bounce back down to the 61.8 or the 78.6 fib, which in turn could be support levels again. If price does not break above the 118, right, and there's again a bearish candle, it might make that move down to the 61 or 78.6 fib right away. So that's the main analysis. And if we get these bounces at these fibs, or the 88.6 fib for that matter, then of course there could be a bigger bounce up to resistance, and then this time it might break after a bull flag. So that's kind of the path of least resistance that I'm looking at. It's always an equation in the sense like, if price does that, then I will do this, right? That is how we keep our bias and analysis flexible. That's how we find the setups that go with the flow. And then our job is to say, okay, what is the decision zone? How do I enter? And what kind of space is there, right? So this is a decision zone, but what kind of space do I have if there is a breakout? And we established that there is some space, but not a ton of space. There's some space for an intraday trade, but is it the long-term trade? Not yet. The long-term trade would have to break above this resistance trend line, and then there could be a larger move to the upside, you know, going up to 120, 120.70, 122.50, and it has the potential to move up like that. But for the moment, I think that this correction will expand downwards, and then we should see a bounce back up again. That's my main analysis for the euro dollar, but keep in mind that interest rates will impact the flow and the movement of these currency pairs. There's nothing we can do about it, and it just depends on that data, and we'll have to see. Of course, US interest rate hike is, I think, priced in a little bit in the market. Maybe that's why the euro dollar is moving down. You know, we should expect the dollar to, you know, there's a good chance that it will go up. So, you know, this movement with the dollar strength does not have to be that big necessarily, even if we get an interest rate, because it does seem likely at this moment. I'm not a person that follows fundamentals that closely, but that's my 2 cents. Now, with regard to the pound USD, it is really challenging our key support level here at 133, which is, the potential wave 1-2 still. I should say wave 1-2 like this, actually. And price is bouncing at this moment. So I think that, this analysis is not invalidated, that this could be the end of the wave 4, or I should use a different color, wave 4, and this is a wave 1-2 of a bigger wave 5. It could still be possible because price did not break below this bottom. So for the moment, still in a bouncing spot because of the moving average, because of this fractal, the support, and the support trend line. And the fact that this could be a wave 4 and then we can have a wave 5. So there are a couple of factors here that aid and support a potential bounce. Price is bouncing as we speak. If we zoom into price action, well, what I would like to see probably is a good 4-hour candle close like this. Another option could be to wait for the 21 EMA to break, for price to break above that, and then there's a good chance of a bullish breakout once price does that. Excuse me. All right, on the hourly chart, it could be good to wait for a momentum, basically strong 1-hour candles, a flag, and then a breakout. That could be another way of tackling the upside, and that's about it. Otherwise, this is in a triangle with support and resistance close by. So for the moment, there seems to be a little bit more space to the upside because resistance is further away than key support is. So from that point of view, there could be a bounce to resistance. Now, what price does at that resistance, I think still remains to be seen, but I would lean towards a bull flag breakout situation with the pound. But we gotta be respect the resistance, because that could equally send price back down again, all the way to the bottom of this range in a way. So gotta be careful of that resistance level. Now, if price were to break below this support, I at the moment would be a little bit surprised, but it also depends on this 4-hour candle. As I just said, if this 4-hour candle is closing bullishly, then I think a breakout is starting to become a little bit more likely. The breakout, I think, looks a little bit better if it breaks above this moving average. And let's take a look at the daily candle. Yeah, okay. But if it does break below this support trend line, these support trend lines, then yes, a breakout down to the 61.8 fib is possible. If we get a bear flag, a continuation breakout towards the 78.6 fib becomes then also likely. So that would be key to keep an eye on these levels too, for a potential breakout in the opposite direction. All right, that's it for the moment. Check out elitecurrency.com for more free analysis and, of course, free material. Check out our ECS.start package, where you get a lot of good info as a start out. You can look at the PDFs and the system and the indicator. So check it out, and above all, wish you good trading. Cheers.